Now, looking back, what's a lesson or two that you've taken from that? And I think that's kind of led you into some of the resources you provide now, if I'm right.
Yeah. So, I mean, listen, big takeaway for me. It's kind of embarrassing, right? Like these are probably obvious to everybody listening here.
It's just the 3 of us, Jordan.
Yeah.
It's
Well,
just
it's
the
probably
3 of
obvious
us.
to you too and anybody else who might accidentally hear this. Right? Like these lessons, they seem so obvious now, but I was so ignorant. I knew nothing about business. I knew nothing about investing at the time. But like, listen, don't rely on the person who stands to gain from you buying a deal solely, right? Don't rely on them solely. Have somebody who this is for laundromats, this is for anything, right?
Yeah.
Like
Yeah,
have
yeah.
somebody who understands what you're trying to invest in or what you're trying to buy, just help you walk through, especially the first one, right? Just have somebody who understands it, walk you through that first one to make sure that you're asking the right questions, you're getting the right information, right? You're looking for the red flags. And, laundromats specifically, they're a cash business, right? We've got a reputation over here of being pretty shady with our finances. And so, verifying income is not easy, right? And so you need somebody who knows what the finances actually should look like and who knows the things that you don't even know that you should know before you buy a laundromat, right? And
Mm.
why invest tens or hundreds of thousands of dollars or more in a business and not have, invest in somebody who can make sure you understand fully what you're getting before you actually close on that deal. So, I mean, a 15-minute conversation with now me back then would have saved me six figures, hands down, easy.
Mm.
Right. So get in with somebody there. And then the other thing too, that I kind of alluded to is when business goes down, I think a lot of our, as like a business owner, a lot of our tendency is to look for places to cut expenses. And one of the first places we typically go to is the marketing side of
Yeah.
thing, right?
Mhm.
And it's the exact kind of wrong thing. That's like the downward spiral right there. And so, that's sort of the other thing is like, don't cut the marketing when you need it the most there.
So for what I'm hearing is I heard a couple things there. One is that unfortunately you're part of that 5% for a while, right?
Yeah.
If someone were to go out there and look at buying one of these things and they want to be part of the 95%, what are some potential gotchas that they should be aware of to avoid?
Yeah. Okay. So like I mentioned, this is a cash business. One good thing is we're finally starting to adopt some new technology here, like digital payment systems, things that everybody else has had for like a
Yeah.
decade.
Yeah.
Yeah.
We're finally starting to like, okay. But most laundromats still are cash businesses, right? So, the gotchas you really need to be looking for are, obviously if you're trying to sell something, you want it to show as much income coming in as possible and as much expenses going out as possible. And, unfortunately, if an owner, which you will encounter for sure if you look at more than a couple laundromats, tax returns, bank statements, those kind of traditional types of things, they're just not going to be super useful in most cases in terms of verifying income and expenses. So, it comes back down to, having to stack different methods of verification on top of each other to try to get the full picture, right? So you want to do things like a coin count where you go in and actually collect the coins with the owner. You want to try to get access to the camera system if there is one, or put one in if there isn't one during due diligence, right? To just see how many customers are coming in, what they're spending their money on, make sure the owner's not doing anything shady like salting the mines, which is like adding quarters at night. So when you go collect them, it looks like more was in there actually. You got to put on, this is what I say all the time. You got to put on your like inner junior high hat. Like when I was in junior high, I was always like looking for ways to get into trouble. Right. And,
Mhm.
it's like the whole trust but verify, but you got to
Yeah.
like, you know, if I was going to pull one over on me, how would I do it? Right. And things that like looking at utility bills, you got to look at the utility bills because you can see sometimes where income's going up, but then you look at the water bill and you're like, well, there's not more water being used. So how is the income going up? Right. And
Drivers.
there's potential ways it could, like if maybe they raise prices or, but
Mm. Interesting.
these are the things that you got to be looking at to be able to verify this income and the expenses here.
Jordan, if somebody were to get it started, where do they start? How much money do they need? What resources are available to them?
Yeah. So, okay. The answer to all your questions pretty much is it depends. So we'll just get that out of the way, but I'll try to tell you like what it depends on, right? So there are ways to get into this business with very little money down, right? And that can be an attractive way, right? And, there's things like owner financing. Owner financing is sort of like the holy grail of real estate investing, right? Well, it's actually fairly common in a lot of business acquisitions and especially in laundromats, which is good. But the reason it's fairly common is because so many laundromat owners either have very bad books or no books, or they have very good books. Like maybe they have more than one book even, you know what I mean? And so that makes it difficult for these to get financed through traditional financing methods. And so seller financing is option. So it's a good thing that option is there. A lot of times it's not as good because sometimes it just means something shady's going on and you got to be able to figure out what it is and, factor all that in. So, how much money do you need? I mean, usually I would say to go the safer route, 50 grand is probably what you're looking at for down payment as a minimum and maybe some operating costs. But a way to sort of back into a number, which is probably, I think, a more useful way to think of it is, laundromats are valued based on their net income, right? And then what we do is we apply a multiple to that net income. Right now in today's market, the multiple is usually somewhere between 4 and 5.5 times the net income there. So, what you can do is sort of take, the number that you're looking for in terms of like cash flow and, apply a multiple to that to sort of get a valuation. And then if you want to go traditional financing options, there's a few different options out there for you. So if you go like a laundromat specific lender, they're looking right now, at least in this market, they're looking for like 40% down, which is higher than normal, but that's just sort of the market we're in right now. There's some SBA options that are 25 or even down to 10% down. And so you can look into those. But those will kind of give you a framework of how much money you need down. And then I would say you probably need some operating costs, above and beyond that. You're going to need things like a down payment for the lease or like a deposit for the lease. Sometimes utility companies have deposits. You might need to buy quarters from the previous owner if it's a quarter store, things like that that are there. So those are some of the things to kind of factor. But if I had to like pinpoint like a minimum down, I'd say shoot for 50 grand. You can do it for less than that. But the further below that you go, the riskier the route is for the laundromat.
How much time and energy does somebody need to expend if they buy one of these things?
Great question. I mean, this is like one of the big draws of laundromats, right? Is like they're pitched as passive. I would not say they're passive. It's a bit, one thing I like to say a lot is like, anytime you're dealing with people or machines, there's going to be problems and you're going to have to deal with them. And with laundromats, you got a lot of both, right? And so there are issues that come up. There are problems that come up. So I would not call it a passive business. However, kind of depending on the business model, right? If you have a self-serve only laundromat, I mean, you're looking at like 5 to maybe 10 hours a week to put in to run this thing. Maybe you might want to like account for a little bit more than that up front just to kind of get to know the business and, get things running the way you want it. But after everything's running, I mean, I think you're going to have a hard time spending more time than that at the laundromat. But right now, a really good opportunity that's happening in our industry is the service side of the business, right? So whether that's people dropping their laundry off at the laundromat and you processing it or your staff processing it for them, or pickup and delivery, where you have a driver that goes out and drives a route and picks up laundry and brings it back and then delivers it back clean, which is a huge growth opportunity right now in our industry. I think we're scratching the surface and it's going to be booming.
You want to see the entire episode? Click here. If you want to learn how investors use infinite banking to increase their returns and lower their taxes, click here. If you want to see if infinite banking is for you and you have some questions, hop on a discovery call with us and one of our coaches. The link for that will be in the description.